Welcome to the presentation of the proposed special rate variation for Upper Lachlan Shire Council. The councils have given in-principle support for the intention to apply for a special rate variation to ensure Upper Lachlan Shire Council's ongoing long-term financial sustainability. The increase in the rate revenue is proposed to begin in the 2024-25 financial year and will require approval from the independent regulatory body, IPART, the Independent Pricing and Regulatory Tribunal, that sets the permissible annual increase in the rate revenue for all New South Wales local government authorities. At this stage, the Council has given in-principle support to inform IPART that an application is intended to be made in February 2024. The intention will be submitted by the 24th of November 2023. The purpose of this presentation is to inform the community of the key considerations that the Council has already undertaken to reach this stage in the decision, to encourage the community to engage with the Council through reading the information made available and provide feedback to the community through the online survey and providing submissions to the Council for further consideration. This presentation will introduce the proposed special rate variation. It will explain what the need is for the special rate variation and what the impact of the increase will be on rates. It will also explain what the additional rate revenue will be spent on and what will happen if the rate increase is not approved, and what is Council doing to be more efficient and limit the increase in the rates. And finally, the presentation will outline what the next steps are and how you can engage with the Council on decisions that need to be made. Council is considering whether to continue with the current base case, that is, rate peg only. The rate peg is an increase determined by IPART to meet cost indexation only, or alternatively to apply to IPART for a special rate variation to increase the rate revenue above the rate peg. If the decision is to apply to IPART for the special rate variation, two options are being considered by Council. Option 1 is a permanent increase in 2024-25 financial year of 55%, which includes the increase that would have occurred by the rate peg. Option 2 is a staged permanent increase of 35% in 2024-25 financial year, an increase of 15% in 2025-26, and a final additional increase of 5% in 2026-27, which includes the increase that will occur by the rate peg for each of those financial years. The cumulative impact across the three scenarios is that the base case over 3 years will increase the rate by 8.74%. Option 1, the 1-year SRV, will increase the rate by 62.85% over 3 years. Option 2, a staged SRV over 3 years, will increase the rate over the 3 years by 63.01%. Upper Lachlan Shire Council has never implemented a special rate variation application in the past. This is an unprecedented step for Upper Lachlan and is now being considered due to the structural deficits as identified in the Financial Sustainability Review completed by AEC Group. Upper Lachlan is one of only a small number of councils to not have had a previous special rate variation. The structural deficit has resulted from the direct impact of inflation on costs well beyond the Council's control, which are not adequately covered by the annual increase in rates, the rate peg, which is set by IPART, the Independent Pricing and Regulatory Tribunal. Increases in the costs contributing to the structural deficit include the Emergency Services Levy, audit office fees, petrol, energy and insurance costs, and employee award wages. The cost of capital works has also been impacted by a large increase in the cost of construction materials and contractor fees. What is the rate peg? Rates increase every year in line with an amount set by the New South Wales State Government. This amount is calculated every year and is called the rate peg. It is decided by the Independent Pricing and Regulatory Tribunal. The rate peg is calculated by IPART to increase the rate revenue permissible in line with the cost increases across the local government industry. It is not specific to Upper Lachlan Shire Council. There is also an adjustment for increase in the population. When setting the rate peg for each council, IPART does not consider what each council's financial position is. If a council's general rate revenue is not enough to maintain service levels, it can apply to IPART to increase overall general rate revenue by more than the rate peg. This is known as a special rate variation. In order to apply for a special rate variation, the council must demonstrate to IPART that the council's application meets the criteria to be approved by IPART. For more information about rate pegging and special rate variations, that information can be found on the IPART website. What is the criteria that IPART apply? IPART is required to assess special variation applications against criteria set by the Office of Local Government. The criteria require councils to demonstrate the following: the need for the additional revenue, provide evidence that the community is aware of the need for and the extent of a rate rise, exhibit relevant planning documents, explain council's productivity and cost containment actions and plans, and establish that the impact on affected ratepayers is reasonable. Again, more information about rate pegging and the special rate variation can be found on IPART's website. So why is there a need for the special rate variation? Council engaged AEC Group to undertake an assessment of Council's financial sustainability. AEC provided to Council an analysis of its past performance, the current financial position, and a projection of the future financial position if there were to be no significant changes to the current direction. An assessment of Council's financial sustainability was undertaken by AEC based on two tests. First test: can the Council maintain fiscal capital, that is cash, over the medium to long term while delivering services as outlined in the planning and strategy documents? The second test: can the Council maintain infrastructure capital, that is assets, over the medium to long term while delivering services as outlined in the planning and strategy documents? The Council needs to meet both of these tests to be sustainable. The key findings by AEC are available on Council's website. The key findings outline that the Council has commenced historical operating deficits in the 2021 year and 21-22 and has forecast further deficits in the 22-23 and 23-24 financial years. Please note that the 2022-23 statements are not yet published and therefore the budget has been used. The operating deficits are recurrent and predominantly due to the services provided in the general fund. That's not sewer or waste services. With operating deficits projected to continue for the next 10 years, the general fund will not generate sufficient cash to invest into the maintenance and renewal of assets, as well as meet borrowing commitments for the existing loans. At the end of the 2017-18 financial year, Council had $30 million in cash and investments, which has deteriorated to a budget cash and investment of $24 million at the end of 23-24. In addition to a deteriorating cash position, the Council is not investing adequately in renewal of existing assets. An urgent increase in asset renewals is required to avoid further deterioration of assets and likely asset failure. This table presents the consolidated income statement for Upper Lachlan Shire Council. The consolidated position is a combination of the general fund, the water fund, the sewer fund, and Council's waste services. There are 5 years of actuals from annual financial statements presented from the year 2017-18 to 21-22, as well as 2 budget years, 22-23, 23-24. The budget position for 22-23 is presented because there are no published annual financial statements in presenting this table. The bottom line on the table shows the net operating result, that is, without capital grants included. This presents a more fairer and truer picture of the profit loss or the operating position for the council. This table shows that council produced a $3.9 million deficit in the 2021 financial year and a deficit of $1.2 million in the 21-22 year. In the budget years of 22-23 and 23-24, the net operating result deteriorates to $4.3 million by the end of the 23-24 financial year. Producing operating deficits are not sustainable for local government because it means the council is not producing enough cash to replace assets at the rate that they are being consumed, as well as continuing to provide the services that support the livability of the community. This figure shows that the cash position from the period of 2017 to 2018 to 23-24 is deteriorating. This is not sustainable for Upper Lachlan Council. It cannot continue to deteriorate its cash position. A deteriorating cash position for a council can be a major concern. That is because at the end of each financial year, the council has to quarantine cash for restrictions, that is, for future commitments. The external restrictions can be for things such as developer contributions, which must be spent on future assets, as well as unspent grant funding that the council has received. Internal restrictions can be for leave entitlements, or the rehabilitation of landfill or gravel pits. The remaining cash after considering restrictions is unrestricted. This figure shows that over the projected 10-year period, Upper Lachlan Council will have a negative unrestricted cash position. That is not sustainable, and the council cannot continue to do this. That means the council does not have sufficient cash to quarantine for restricted purposes. So what about the second test, the infrastructure capital? Well, council's assets are currently in a state that requires additional cash invested in the renewals. The current rate of investment is not maintaining the assets adequately. You may see this by the state and the condition of the assets. There are a few examples here on this slide. In reviewing the council's financial sustainability, AEC did some benchmarking of Upper Lachlan's average general rates compared to other comparable councils. This table compares the Upper Lachlan average general rate for residential properties compared to other councils. The Upper Lachlan average general rate in 21-22 at $575 was the third lowest in its group. This table compares the average general rate for business properties for Upper Lachlan compared to the comparable councils. Upper Lachlan's average general rate in 2021-22 was in the middle of comparable councils. And the farmland rating category, which is a major contributor to the general rate at Upper Lachlan Shire Council, was the fourth lowest of comparable councils in 21-22. So what is the impact on the proposed SRV on your rates? As outlined earlier, the cumulative impact across the three scenarios differs 8.74% for the base case, 62.85% for option 1, that is the 1-year SRV, and 63.01% for option 2, the staged 3-year SRV. What is the impact on the average rate? The table below shows what can be expected in terms of an increase in the average rate for each of the rating categories across the 3 financial years. This slide compares the base case, that is, just the rate peg, compared to option 1, the 1-year special rate variation of 55% in 24-25. You can compare for each of the rating categories what the average rate increases under option 1 compared to the base case. The final cumulative impact is 62.85% for all rate categories compared to the base case of 8.74%. This slide compares the base case to option 2, the staged 3-year implementation of the special rate variation. Again, each rating category is presented in terms of the average rate for the 3 years 2024-25 to 2026-27, with the cumulative impact of the option 2 being 63.01% compared to 8.74% in the base case. Following the implementation of the special rate variation in the year 2026-27, the average residential rate for Upper Lachlan will be comparable to Forbes. It should be noted, however, that other councils on this list are also pursuing special rate variations, so their rates too will increase. Similar to the previous slide, this slide shows that the average business rate for Upper Lachlan at the end of the 2026-27 financial year is expected to increase to be comparable to Junee. It should also be noted that the councils on this list are also either considering an SRV application or have submitted a special rate variation since the 21-22 financial year. Similar to the 2 previous slides, this slide shows for farmland rates what the average rate will be at the end of 26-27 compared to other comparable councils. The farmland rate, the average rate, for Upper Lachlan is expected to be similar to Hilltops or Yass Valley. So what will the additional revenue be spent on? Both option 1 and option 2 will generate an additional $4.7 million in rate revenue for the council by the end of the 2027-28 financial year. The additional special rate variation funds will be used for ensuring financial sustainability in the long term through maintaining a sustainable cash position while delivering the current services. It will increase the gravel resheeting on the unsealed road network, which includes reshaping the road, an asset renewal program. It will increase the reseal program on the sealed road network, an asset renewal program. It will increase the current renewals of council's stormwater drainage network, and it will renew building components such as roofs, flooring, internal fit-outs, cladding, or possibly replacing the current buildings. So what will happen if the SRV is not approved? Based on the current financial settings, council will not be financially sustainable in the long term without additional cash generated from operations to address the asset renewal and maintenance required. Without a correction, council's asset renewal backlog will continue to increase and assets will deteriorate and not meet the desired level of service. Council will need to balance the allocation of funding, including significant service level reductions, to ensure that an appropriate amount of funding remains available to maintain an acceptable level of risk and compliance with legislative requirements. So what is council doing to be more efficient and limit the increase in the rates? As part of the Financial Sustainability Review, AEC Group identified the following efficiencies that Council has achieved, as well as a list of opportunities for future efficiencies that Council will be pursuing. AEC Group also identified further cost pressures and expenses that the Council is likely to incur into the near future. The Council is committed to funding the future cost pressures and expenses through achieving efficiencies, and therefore is limiting the increase passed on to ratepayers. What are the next steps and how can you engage with the decisions to be made? The IPART deadlines are as follows. Notification to IPART of the intention to submit an application currently does not have a set date, although historically this has been in November. Special rate variation applications are due to IPART by the 5th of February 2024. IPART will invite submissions for their consideration and decision on the application, and determination announced by IPART will be in May 2024. Council will need to consider the feedback from the community from the current engagement processes and make a resolution to submit the intention to apply for a special variation. If an application is intended to be submitted, Council will need to revise and update the resource strategies, being the long-term financial plan, the workforce management strategy, and the asset management strategy, including the options as well as a scenario if the SRV is not approved. The resource strategies will be on public exhibition for 28 days, in which Council will receive submissions from community members. The application will need to be prepared using the IPART templates and addressing the criteria. Council will need to make a resolution to submit the application and then submit all documents by the 5th of February 2024. The Council encourages all community members to read through the materials made available to the community. The Council's website has the SRV fact sheets and a Financial Sustainability Review key findings, as well as a copy of this recorded presentation. Community meetings are being held in each of the major townships, and Council is providing information through the media, through a mail out to all ratepayers, an email sent directly to community groups, printed promotional materials, fact sheets, letters, newsletters, and on Council's social media. The Council encourages all community members to provide your preference and other feedback to be considered in the Council's decisions. Please use the online survey provided on the Council's website. Members of the community that are not able to complete the survey online can obtain and complete a hard copy of the survey, which will be included in the survey results. Other written applications can be made to the Chief Executive Officer and addressed to PO Box 42 Gunning, New South Wales 2581. Council will also receive submissions by email, which should be sent to council@upperlachlan.nsw.gov.au. Thank you for taking the time to listen and to watch this presentation. We look forward to receiving your feedback.